Welcome to The Man from Macro, and this week we'll be looking at two of the biggest stories in the news at the moment in terms of the financial press, and that's China and also the dollar, but really through this expansion of the BRICS economic group. Now remember, this is all for engagement and entertainment purposes, and none of this constitutes investment advice. Now, kicking off with China first, and this is a topic we've touched on in a couple of past episodes, and it seems like that line in the sand that we talked about on the SH Composite Index, this is the Shanghai Composite Index, is actually a key level for the policymakers because we got very close to it, and then over the weekend we saw quite a lot of new policy, particularly macro-prudential policy, as well as loosening, and this allowed the index to bounce off this very, very big line. Now that bounce so far was pretty impressive at the beginning, but slightly underwhelming as we are today, which is the morning of the 29th of August. We initially saw a 5% bounce on Monday, but it gave back nearly all of that. Although today, Tuesday, it is trying to rally a little bit from that line again, about 1.4%. So the jury's still out as to whether this policy is going to make a massive impact. And this line has held for so long that my view would be that if it breaks, then it means that policymakers are actually being less concerned, or actually realise that it's a lot harder task for them to combat the issues at hand on the domestic arena. Now, the other thing that I looked at before, which I think is an indication that the wider market is not taking as much of an interest in this, is that the ratio of the KOSPI 200, which is the Korean index, versus the DAX, although initially outperformed, it has now returned back most of that outperformance. Remember, these two indices, the KOSPI and the DAX, are both big exporters, but the KOSPI is usually very much aligned towards China. If the world thinks China's doing better, then the KOSPI should outperform. And so far, we've seen very little outperformance this year. And once again, on the back of this macro-prudential announcements, we've only seen a small pop in that Korean market. It's really something that's not particularly impressive so far. So how can we play that in maybe other global assets? Well, one I've looked at before is the European Basic Resource Index with lots of miners in it. This is the SXPP. It has also bounced, and it is testing that big neckline around about the 510, 520 level, as you can see on this chart. But if China is looking to prop up its domestic economy, it's going to be doing things that look after the domestic banks and the shadow banking system rather than that building everything, which is actually the real problem that they have today, which is that they built too much, too fast, and they've got this overcapacity issue and too much debt. So therefore, I think that we wouldn't expect these miners to benefit from this policy in the way that we had pre-2018. But we've known that this has been a problem for a while, and there's that second story is slightly attached to this one, which is the BRICS are expanding their universe. These are the Brazils, the Russias, Indias, the Chinas, the South Africas of the world. They're adding new members to that, and particularly of note is that with these new members on board, there will be a significant proportion of the world's oil exporting countries within this trading bloc. Now, inevitably, whenever we hear the BRICS story and we talk about currencies, etc., you'll hear that inevitable story that the dollar is about to decline or the demise of the dollar. And I want to look at two very distinct things here. There is the level of the dollar, and that should be seen as very, very distinct from the relevance of the dollar. That's the geopolitical story behind it. In fact, as the relevance of the dollar declines, you may even see more pressure on the dollar upwards, because if you see fewer dollars in the international system, and this is a system which is still awash with vast amounts of cross-border dollar-denominated debt. Some put it as high as 12 trillion, this is the BIS, and others would argue that off-balance sheet could double that to somewhere like 24 trillion of dollar-denominated debt. If there are fewer dollars knocking around the system, then it becomes harder to pay back that debt. There's a scrabble for dollars, and that could see the dollar rally. So the relevance of the dollar and the level of the dollar should be considered as two very, very separate things. And I'm just going to look very quickly at the level of the dollar today, because we've seen the Chinese currency has been testing those recent highs. This is the US dollar versus the CNY at that 730 level. And again, it looks like that might be a line in the sand in the short term for the Chinese authorities. But over the long term, the Chinese authorities have been watching their currency decline gradually. There have been these moments where they've stepped in to strengthen it. But overall, particularly through Xi's premiership, we have seen the Chinese currency slowly on the back foot. And there's no reason to think that that's changed. In fact, over time, we should probably expect 730 to break, and we might be seeing 760 and levels like that on the Chinese currency. And we've known that the dollar has actually been strong against a lot of other currencies, because we've seen before the emerging market currency index has been testing the all-time lows, and that's dollar strength when this is at those all-time lows. Because really the story for the dollar recently has really been about the euro, and to a lesser extent things like sterling. And on this chart you can see the euro and sterling versus the Australian dollar. The Australian dollar, which is that commodity exporter, is showing weakness akin to what we've seen in those emerging markets. So when we talk about the dollar weakness that we have seen versus the dollar strength that we're seeing across many other currencies, it's really been about euro strength in particular. And the big question now is that euro strength going to continue? Because a lot of this was the dividend on seeing those energy prices collapse in Europe. As you can see here, this is the front month European natural gas futures. They were incredibly high last year when we worried about Ukraine and those exports from Russia drying up. But since then, we've seen this combination of other sources coming online, but also that very, very mild winter. And obviously, we've been through the summer period. We've now seen those prices decline back to pretty much the 5-year lows. Now, therefore, the risk probably is that there's more likelihood of higher prices going forward than lower prices. So the benefit that we've seen from those lower European prices is probably now behind us. And yet, what we're also seeing in Europe, and particularly in Germany, is that confidence is starting to roll over again. We've had a bounce with those energy prices rolling over. But in Germany, consumer confidence is below the lows of the COVID era. And what's more, we're seeing in the US an edging towards higher interest rates once more. So although people had expected this pivot to come along, and there is still a pivot priced in for the end of this year and the beginning of next year, the actual expectation now is that we will get at least one more rate hike, or is there increasing expectation of one rate hike in the US before the end of this year? It seems that that pivot is still very, very much too early in terms of reality. And the problem we have is that in the US, we all expect there to be a slowdown in the future as eventually the lagged effects of high rates come through. But as we sit here in this window where they've not really come through yet, or not come through with great power, this still means that there is risk to the upside for things like inflation. There's still a relatively strong economy in the US, although we are seeing deterioration at the edges. And if the US is tightening rates at a time when Europe looks like it's starting to roll over more dramatically, then that could also be a driver for the euro to go lower. And so just to summarize, and actually just before that, please do subscribe and ring the bell if you like what you're hearing and you want to get those early alerts to anything that's coming out from the man from Macro. But in summary, what we're really seeing here is that there's potential for the dollar to go higher. Might not break the highs versus the DXY, but the potential for the dollar to go higher versus the euro, because it has been going higher versus nearly all the other currencies. It's not to do with the relevance of the dollar and that story about the BRICS, which is that super tanker trend. That's going to play out over many, many years. In fact, it's probably going to play out over an investment horizon that's beyond our own investment horizons and maybe even beyond our own lifetimes.